Do you want to buy a house but are worried about the cost of the monthly payment? Well, as a real estate agent, I help buyers every single day make homeownership more affordable. And today I'm going to share with you 5 little known strategies that can help you save on your monthly payment and save thousands of dollars over the long run. Let's first quickly define what goes into a monthly payment. A lot of people think their monthly payment is just their mortgage payment or their principal and interest payment. And while this is a large factor to what goes into your monthly payment, it's not the whole thing. When I'm referring to your monthly payment, I'm referring to PITI, and that stands for principal, interest, taxes, and insurance. Taxes and insurance are a thing that a lot of people fail to realize is a heavy part involved in your monthly payment. And this is what I'm talking about when I'm saying strategies to lower your monthly payment. So now that we have that defined, let's hop into the 5 strategies to get you a lower monthly payment. One of the biggest factors to your monthly payment is your interest rate. A lower interest rate obviously means a lower monthly payment. And you may be sitting here thinking, well, if my lender said I can get a 6.7% rate, then that's the rate I'm stuck with. And that's actually not true. There's a strategy where you can actually buy down your rate. So you effectively take money at closing or out of your pocket at closing and pay towards buying down your rate. And this can save you hundreds of dollars per month over the course of your entire loan. And if you don't have money to come out of pocket up front at closing, you can actually do a strategy where you take a seller concession or money from the seller at closing and apply that money to buying down your rate, effectively giving you a lower rate. So let's say you got quoted at a 6.7% rate, it'll effectively make your rate around maybe 6.4 or 6.3. You have to talk to your lender and see the right strategy for you, but these are strategies that we use all the time to help clients get a better rate. Strategy number 2 is choosing the right loan program that fits your needs. There's different loan programs that offer drastically different terms. For instance, you could do an FHA loan at 3.5% down, have a lower interest rate, and pay something called PMI. If you're a veteran, you can also do a VA loan at 0% down and get the best possible interest rate. There isn't just 2 or 3 set cookie cutter loan programs that work for everybody. Different lenders are going to tell you about all these different loan programs that they can potentially offer you. So you want to make sure you know the loan program that fits your needs. There's also something for first-time home buyers that some lenders can do, where it's a special first-time home buyer program that'll offer lower closing costs, better interest rates that can really help out a first-time home buyer. So make sure you run all these ideas with whatever lender that you choose to go with. Strategy number 3, and this is probably the most important strategy that you can use, is choosing the right lender and the right real estate agent. This will make all the difference throughout the beginning when you're searching for homes and all the way to the end when you actually close on the house. The right lender is going to tell you what the programs are that are going to be best for you. They're going to walk you through every step from the closing costs and how much closing costs actually are and how you can save on it. And the right real estate agent is going to have the good lenders that they consistently work with. They're going to have all the strategies like the point buy downs and the seller concessions to save you the most amount of money. This in and of itself will save you hundreds of dollars per month on your monthly payment and thousands just over the course of your loan, and also get you the right property that you feel comfortable with within your budget. Now again, I can't stress this enough, this is definitely the most important step, and you could end the video here if you want, because if you can get this right, if you can find the right real estate agent and the right lender to work for you, that is going to make all the difference. And again, I don't want to plug myself, but I am a real estate agent. If you are looking to purchase, sell, buy, whatever it is, I would love the opportunity to help you out. Strategy number 4 is lowering your property taxes. Now, property taxes are what they are. If anything, they just go up over time. But like I said, PITI, principal, interest, taxes, and insurance, the taxes portion are a major form of your monthly payment. So ways to lower them, for instance, if you could just simply find areas that you're okay with moving into. Let's say you have 2 areas that you're comparing and the house values maybe are a little bit cheaper in area B but have much higher property taxes, and the other property values are actually higher but have much lower property taxes. The other area might be the better place for you to move into. Even at a higher purchase price, if the property taxes are lower, this can significantly off-put your monthly payment to be lower than what a less expensive house would be, but with a higher property tax area. And a good real estate agent will also help you out with this. For instance, in my area, the North Cleveland, Ohio area, I know that Lake County, for instance, has much lower property taxes than Cuyahoga County, and this literally saves people thousands of dollars a year on their monthly payment. So find the right areas that you want to move into and understand the property taxes. All you need to simply do is go on the auditor's site and you can see what the property tax bill is for that particular property and compare and contrast a few different areas. Strategy number 5 is getting rid of PMI or private mortgage insurance. So anytime you buy a house with less than 20% down, you have to pay something called PMI, which could be anywhere from $100 to $300 a month on your monthly payment. And this obviously adds up a ton. But the second your house hits above 20% equity or 20% equity and above, you can actually request to waive the PMI and the lenders will do it. They'll send out an appraisal, make sure you have 20% equity now, and they'll get rid of your PMI payment, saving you hundreds of dollars per month. Now, for instance, a great strategy you can do is if you know you're gonna be buying a, let's say, fixer-upper, something that needs a little bit of work and you're gonna work on it while you live in the property, you can make sure that the second you got you fix it up enough to get 20% equity in the property, you immediately waive the PMI payment. This is something a lot of homeowners fail to do and fail to even realize, and it'll save you hundreds of dollars per month each and every month. If you guys are looking to buy a house and are curious more ways that you can lower your monthly payment before actually buying the house, I would love the opportunity to help you out, and drop any comments below of strategies that you may have used to lower your monthly payment as well. I would love the comment section to help one another out and learn from each other's strategies. Appreciate you guys watching the video. Thank you again.